This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. So today I'm going to talk about the S&P using the Spider ETF, and then I'm going to look at the QQQ and give an update. I also want to spend a few minutes and go through the market conditions. I want to make sure I'm doing that at least once a month. Especially because there was a shift that took place this week that's pretty important. So let's go ahead and get into this. And so I've got the conditions listed on the left. I am going to go through the trend and momentum on both the S&P and the QQQ in a minute. But let's go through these other components of the market conditions. First, the volatility. So that's listed over here on the right. I've got the daily chart, and this red line is showing the average true range, and I've got an 18 MA along with it. And so if I zoom in on that, you can see that we've got a flat moving average. So even though we've made a move to the upside, the moving average is flat. So I would consider that to be neutral right now. So it is showing an increase in volatility, but it hasn't done it long enough for this to be considered negative yet. So if this were to push a little bit higher and turn this to the upside, especially if we get a pattern where this comes up and pulls back and holds the moving average, which is now rising, that's a lot more bearish. Most of what we've been seeing is these failures at the line. Like the line is rising and then it just fails and goes right back down through it. So kind of looking for this kind of a pattern. And what is that pattern? Well, it's a pattern we've talked about a lot. It's a 1, 2, 3 change in trend. So kind of looking for that to confirm. And yes, I would be looking for a break above this peak, just like that. We're looking for the same thing we're looking for on a price chart. We're just looking for it from a volatility standpoint so that it increases the odds that we're getting something that could be a little bit more sustainable. So on the lookout for that. Just so you know, let's take a look at the weekly volatility. I mean, it is just continuing to plunge lower. It's just not that much volatility yet. It will start to take place at some point. Just has not kicked in yet. The overbought, oversold is at 59 right now, 58, 59. It's working its way back down towards this kind of oversold area around 50. Now, if we break the 50 level, that's probably a sign that we're starting to weaken a little bit on this weekly chart. So just something to maybe be on the lookout for. But as I've been mentioning, and I'm going to go into in a minute, the 18-week has been pretty important. Now, one of the big changes that's taken place is the sentiment. And this is very important. Now, it's a secondary indicator. It's not a primary indicator for me, but it's something I want to look at and see what's going on. And the reason why it's important is look at what's taken place. Do you see any difference through here? There's no real difference. We're just moseying along. We've still got a rising 18 and 40. We haven't shown any increase in volatility at all. There's just nothing going on. And yet we've gone from the sentiment was, so that's 28% more bulls than bears. We were at around 45% not that long ago, maybe a few months ago. So we've dropped down without the market doing anything. People are getting more bearish right now, and the market hasn't even dropped. So that tells me that this probably isn't going to turn into a big decline. That we're probably going to get, because once this starts to drop down, maybe down into the teens or something like that, when we're looking for a buying opportunity. So at least that's how I'm looking at it right now. I continue to evaluate as new data comes in, and the only time I'm really looking to buy ferocious weakness to the downside is when we get a deep oversold rating back into prior support, and we get way overdone on the downside, and we get sentiment. When this was down underneath, way down here, these numbers were negative. There was more bears than bulls, and so I mean, when I see that, yeah, I'm going to be a little bit more aggressive on the buy side. But so I just want to point that out and make sure you know that we have been dropping. We're down to 28%. If we can drop a little bit more, then this actually starts to turn to more of a bullish indicator. So just keep that in the back of your mind. Let's go ahead and look at the price charts. So the monthly chart is up, it is extended. So I've actually switched the trend on this, the momentum on this to positive. The MACD trend, momentum has been good, but the ADX is now rising at 32. We have to give that some credence. The negative is that it's overbought. There's distance between them, but the momentum is pretty good. Okay, so let's look at the weekly chart. The weekly chart is not overbought. It's an orderly uptrend. We've got a good-looking moving average environment, but both the MACD and the ADX are very weak here. And ADX just keeps dropping. There's just no improvement in this. And if we zoom in on this a little bit, you can see the MACD is dropping as well. So, you know, we're showing signs where there's not a lot of buying strength. The green DI is still below 25, even though price has been working higher, and that's really hurting the ADX. And the other thing I do want to point out is that we are looking like we're crossing this trend line that I had drawn on the red DI. It's crossing to the upside. We haven't had a crisscross of the red and the green DI, but we see any more downward strength, any more negative DI, continuation to the downside on the price bar, then we're probably going to get a crisscross, and that'll be the first time that's happened since July of last year. So something to definitely watch for. Let's go ahead and look at, so daily chart continues to be weak, no real strength here. We do have a trend line that really has been in place for quite a while that hasn't been violated yet. And so we just kind of want to keep that in mind. I mean, it's not exact. These things aren't touching every time, but it's an area where it keeps coming down to and finding support. So we have to respect that right now. But if we go up and make a lower high and then come back down through this line, then you have to start thinking, you know, that maybe we're going to get this to actually work back a little bit closer to the 18-month finally. So just something we need to keep in mind. Hourly, you know, so actually, I guess I should follow up on the trade from last week. So this is actually pretty important. If I do this trade, not as a hedge, but as an actual downward trade, I'm just doing it independent of my portfolio, and I'm buying, shorting the stock. And I mentioned last week about shorting it on this bar here. We had some gap ups, but it continued to make lower highs and lower lows. And then look at what happened here. We had divergence in MACD. But we also had a peak, a negative peak. We know it's negative, but the red DI was above. So we made a lower low in price, and the red DI only caused a peak, a really low peak, well below 25. When I see that, that's an exhaustion sign. And once this started to move higher, that would have been really the sign to get out of this trade. In fact, you could have been pretty aggressive. If you shorted it here and you maybe scaled out a little bit, I would have taken the balance as this started to work up. In an individual trade for sure. That's a great trade, and it's just kind of working its way. Now, I think what I would be looking for is for these lines to come together, for a MACD to come back to the zero line, and maybe we get a zero line reversal with low ADX. So these patterns happen over and over again. So if we can get these two lines to come together and we get a little bit of a move, probably be a trend line break to the downside. And now all of a sudden, maybe we're getting ready for another leg to the downside. So that'd be what I'd be on the lookout for. Now, if this shows strength and it just keeps going, then, you know, then we're actually, maybe what we do is look for a move to the upside with green DI showing some strength, and then maybe look to buy a pullback. But that's going to take, I don't know, that to me, that's going to be pretty hard to pull off. I think I'd still be cautious about this market right now and seeing if we get a sell setup come in play. Let's go ahead and look at the Qs. So same pattern where we're extended above the 18-month, but it's a little bit more, I mean, this is a stronger trend. This has been above 25 on the ADX for quite a while. It is extended, but I think the conditions on the weekly chart are better. Now, I mean, on the monthly chart are better. The weekly chart are also better because ADX is above 25. Now, there is divergence, but it's not really low and declining like it is on the spider. So I'm kind of okay with what's going on here. Now, the way I would look at this, because the daily is failing, we made a higher high on the daily chart, and this is clearly not making a peak above 25, or did not make a peak above 25, then I would say that the odds are on the Qs that we could break the 40 and we could actually do damage to this trend. Because the ADX is not strong, we could see a reversal in the trend. Whereas I don't know that I'd be looking for that in this time frame, but we could pull back to where support is, like that. So we could come back towards these two, this sort of support area and in between the 18 and the 40, and still be in an uptrend on a bigger picture, but maybe go through some type of a correction and something a little bit more serious on the daily chart. So anyway, that is the update for the week. Go ahead and post any questions or comments, and we'll see you next time.